In part 2, we're going to be looking at the venture capital markets of the major economies. Jeff Bezos, I read, said the key reason why the USA has so much entrepreneurial success is that the country has the best risk capital where founders can raise $50 million even if their business has only a 10% chance of succeeding. Successful venture capital firms understand that out of every 10 investments, in 9 they will lose all their money. But in the 1, they will be so successful that it will more than compensate for the 9 where they had losses. So if Jeff Bezos is saying that venture capital markets are quite key to successful entrepreneurs and companies, let's look at the venture capital markets of the US, China, and the EU. 1 in 6 companies in the S&P 500 were VC-backed prior to listing. These companies have been so successful that these same companies actually make up 50% of the total market value of the S&P 500. All the companies that you see here were VC-backed. So it's likely that if there was no VC in America, there'd be no Amazon, Apple, Meta, or Microsoft. In fact, if there was no VC, it's likely that there would be no Magnificent Seven. The US is by a wide margin the largest VC market in the world by deal size. We can see that Europe and China are growing, but even if you put those two markets together, they're still less than half of the USA. The US has nearly half the world's unicorns. A unicorn is a startup that's worth more than $1 billion. It is still a private company and not yet listed. If we look at the chart on the left, we can see that the US has more than 4 times the amount of unicorns versus China and 6 times versus Europe. If we look at the Chinese venture capital market, the chart on the left shows you the amount of assets under management in the VC market in China. The red line is foreign funds invested in VC in China, and the blue line is local or Chinese funds invested in the VC market in China. You can see that the local funds dominated the foreign funds, but that they've both come to a halt of late. On the right, we can see the number of new startups that have been founded in China has declined rapidly in the last couple of years. Why is this? Well, the venture capital market in China is largely state-driven. In terms of size, state-managed funds are 6 times the size of privately managed funds. And let me ask you this. Do you think governments are the best allocators of capital, especially those whose ideology is rooted in socialism? The answer is no. And this results in subpar returns and government interference. I recently read an FT article on the VC market in China and found 3 interesting quotes from executives who were working there. The first one said, "You don't want to be accused of losing the government's money." The next, "The party is throttling the private sector." And the third one, "Today, VC firms have to explain to the state why their companies failed and why they have lost the country's money." So this is at odds at what Jeff Bezos was saying, is where the successful venture capital firms understand the risk capital, that they are comfortable in losing money on some investments, knowing that they're going to have home runs with others. But there have been some very successful Chinese mega caps, but you'll note that their early VC backers in large part were foreign. Tencent, its early backer was Naspers, a South African company. Alibaba's backers were Japanese and Swedish. Baidu, China's version of Google, had American and 1 Chinese VC backer. Xiaomi, the phone maker, had also foreign backers. Huawei is self-funded. And TikTok is backed by Sequoia Capital, the VC firm out of the US. So let's look at the EU VC market. I'm now going to show you the 6 largest companies in Europe by market cap. LVMH, which has its roots in the early 1700s, is a luxury company. Hermes makes bags and scarves, and is also a luxury company. Novo Nordisk, a pharmaceutical company, has shown some innovation in some interesting obesity drugs of late. SAP is a sort of old business software application firm. ASML, it's the one that stands out here for me. It is a really critical part of the value chain in the semiconductor industry. And Accenture is a consulting company. So when I look here, I don't see much exceptionalism apart from ASML. If I think of Amazon, which is 30 years old, it started as an online bookstore, then became an online everything store, And now 50% of its profits come from Amazon Web Services, a cloud computing platform. Similarly with Apple, which is 50 years old. It started selling computers, then iPods, then iPhones, and then AirPods. But now 40% of its business, or its profit, comes from services. This speaks to the risk averseness of Europe. It shows the amount of VC investment as a percentage of GDP. And you can see Europe is behind or below China and below half that of the USA. Okay, so we've had a look at the three venture capital markets, and we've seen that the American venture capital market really provides a solid platform for dynamic companies to flourish. Join me in part 3, where we'll look at how we actually access some of these opportunities in Flagship's global funds.